Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Well, Marty, there you are. Thank you so much. And how we doing in YouTube this morning? And welcome again to the Trader Lab. This stream's about integrating Bookmap order flow tools with auction market theory using volume profile as a chassis in the intraday developing time frame. It's based on structured trades. They're available to all of you in the Bookmap Discord Trader Lab community. If you're interested in Trader Lab, the work of the Trader Lab is to leverage the collective experience of the traders in the community. There is no cost to belong or join this community, belong to it. It is not about any one way to trade. It's about understanding that trading is a process and an organization of information, and then organizing that information into a statistical edge so that even though the outcome of any interaction with the other market participants is random, if you have a statistical edge over time, and if you have the discipline to execute that edge, same as the casinos, you will extract the dollars from the other participants, even though you do pay the other participants. Same as the gaming or the casinos. So if we can change our belief in what we're trying to make this business into, and most of us believe we can squeeze the risk out and create certainty, which is really, trying to fulfill a psychological need. If we can just look at this as a business and treat it as a business, we may have an opportunity to actually sustain ourselves and create a career path. That's what the Trader Lab's for, and you're all welcome to Trader Lab. There is a link in the bottom of YouTube if you're inclined. You don't have to be a Bookmap subscriber. You won't be solicited, abused, or otherwise. We have the market for that, right? So feel free to join Trader Lab. Now let's take care of business and let's get into the market. Of course, the market is always interesting, and past day or two it's been especially interesting, and today as much as yesterday. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but if we get into something interesting, we can always talk about it. Now, let's try to get things going. All right. Now, again, trying to get things working here. Hold on a second, guys. Got to get things percolating. Okay. First of all, Bruce's pilot program, when we talk about statistical edge, you may be able to extract an edge. How do you do that? Well, Bruce's pilot program is available to you. There's no cost for it. Feel free. It's in the Bookmap server to check it out. Also, as a added specialty, if you're interested in this is some of the work that's done in Trader Lab. There's 60 PDFs. These are examples of structured trades. I'm not a vendor. I put these together many years ago, going back to 2020, hopefully not 1920, going back to 2020 when traders were asking me what I was doing. Also, some of this is research I was doing with Bookmap developers, which, as you know, some of it has been incorporated into add-ons. Others have gone into, we say, the proverbial round file, whereas which most research ends up. And you can use these as ideas, but they're not plug and play. One of the things we always would love to have, and I can say all of us, is plug and play. You know, replicate what somebody else does, plug it in, and then get that ATM in the basement. Doesn't work that way. But there's 60 of these, and you can have these. There's no cost. They're available to you in the Trader Lab, as well as a library of webinars. October 6th, 2020. So, and they cover a lot of different things: structured trades, aspects, order flow phenomena. This is a bracketing algo. These are live trades and also screenshots. This is a live trade I was in. This is where order flow can be useful. This algo was bracketed. I was sitting short. And then, of course, the joy was you see how the liquidity pulled and it pushed up here. I bailed out of this. As soon as I saw that, I bailed out, and the market did this and then exploded to the upside. Isn't that interesting? And isn't that an interesting idea of how you might get an edge with order flow? Order flow isn't only about entering the market. It's about managing your trades and understanding the nuances of the market and maybe how you can gain a statistical advantage. Now, this is yesterday. Now, what's interesting about this is we've had a gap here, and then we have another gap. And these 3 days are a consolidation. And the breakout of the consolidation is down here. Now, what was interesting, of course, about all of this was yesterday, day of days, was we opened first, went down first, and then came back in with some aggressive buying. Wonderful. So if you followed the stream yesterday, it was shorts, and then the market reversed, and then it was get long. So we had the shorts, the longs, and now the primary target yesterday was this. This is called value area low. And you're going to see something interesting because today we have a similar phenomena coming from the other side. But let's talk about yesterday. Now, you should review yesterday's stream because yesterday was, I think, somewhat of a frustrating day in the sense of, for me at least, it was shorts, then longs, and then we had this is the target. So right here was the primary target. That was fine. And longs I had exited here. But then we went into a rotation. So I was looking at the rotation, and I was thinking, well, it is possible. And we had what was called mean reversion. Now, again, yesterday's stream. Mean reversion is outside in. So we were rotational outside in. And my plan for yesterday was, well, first of all, to come down here, into the gap. So that got taken away for a while. And then we were rotating, and I was thinking if we could, and we have over 98% probability to take out the first hour's high or low. The reason I want to talk about this was my plan for yesterday when we were in this reversion trading, which is outside back in, so long rotations, was to squeeze the shorts out and then come back in and get short again. So instead, we never got above this level, though we were working towards it. We could never do it. And we were gradually building volume and making lower highs. So it was kind of like, well, we're either going to pop, come back, and we didn't. We just rolled over. When we fell out of the distribution of the growth, and then we came all the way down, filled the 98% probability of taking out the first hour's high or low, go pick one, and then we accelerated down here. So we took, not only did we get under here in the morning, then we went down further to here. And again, nobody knows, part of the thrill. But here's what is important. And the reason I'm showing you this morning, we still have this gap open. So that's one piece, which was from here. The breakout of the consolidation was here. And you'll notice we came back in here. So we basically went down, blew out the longs, and who knows if we're going back down or whatever we're doing. That's not the main concern here, and came in. What that suggests is this might be excessive, maybe. So then today, what does that do for us today? Well, it says today, if the retail price is here from yesterday, and what is this retail price idea? Too high, or retail, I should say, highest volume. In this whole 3 days, this is the highest volume going up in time frame, and up here was too high, and basically I'm not paying that. So now let's go to today. So what it says is maybe this is excessive down here or not. And today we have a high probability of either taking out yesterday's high or low. And I couldn't tell you which one. It's not my job. My job is to get in alignment. So let's go take a look at today's market and let's see what we can do with this. Now, let me go back here, get back to the open. So today, first of all, so RTH open. Now we're going to talk about those because the first trades I set up today were short. And I have to tell you, me, I don't know. I go in the, I don't know. And I'm not flippant about I don't know. What I am is I'm open-minded. So I don't know what it's going to do. I know we came back inside, and I know the market is short. So what I know is we might squeeze some of these short. So that's one piece. Now, here's another piece that's very interesting and very important. Yesterday's high, which we couldn't get back above, if you remember, and then the ETH high. So in the ETH, we tested yesterday's high. And then the overnight volume point of control, which is the high volume from the ETH, was here. So the fair price. So we have basically maybe too high, RTH too high, and there, and maybe fair. And then we have the ETH low here, maybe too low. So we're in between. Yesterday's high volume or retail price was here. So we're opening in a fair area. So what I know is I'm opening in value area high. 70% of the volume took place between the value area low and the value area high. I checked the RTH high from yesterday. Maybe it's too high. And I'm opening, get this straightened out here, right here. So I'm opening in range, in value, and higher. Higher in range, in value. So what does that tell us? The market's in balance. Now I'm referring to our grid sheet in TraderLab. And if you're in TraderLab, get your grid sheet out. What does it mean? The market's in balance. What's likely? A neutral day or a low conviction day. Neutral means taking out the first hour high or low, or just two-sided trade. Then the question becomes, are we going to break out of the previous day's value area? I don't know. What do you think? Maybe, maybe not. Are we going to continue south of the border and work on that gap? Or are we going to stay inside? Nobody knows. Now, for opening higher in range, let's look at some statistics. Taking out the first hour's high or low, about a 98% probability. Taking out the previous value area high or low, about an 89% probability. Taking out the ETH high, 76%. Taking out value area high, 72. We have an upward skew, but we have something else. We have maybe we're on our way south, and we're on our way to potentially take out yesterday's low. Now, we can stay in range, take out yesterday's high, and just consolidate. So we know that. All right, so it's either or. And the thing is, in trading, we don't know what it'll do. We look at statistics. We try to say, well, here's what it might do, but nobody knows what it will do. So when you get trades, then you have to think about the condition of the market. Let's go take a look. So for me, when I come in, I don't have a preconceived idea. I want the participants to tell me. But I will tell you, my target, if I got selling for today, first of all, ETH low, but value area low, which is this. So this is the target, and this was the outside. And where this is coming from, it's easier if I just grab this. Hold on a second. I don't know if something's going on. The market got very volatile. This is investor RT. This is where the breakout was right here of this consolidation that I was just showing you. And the reason this is important is we came back inside, left the tail. This is the target, and that's the value area low. So from getting short, the idea was to come here. And then it can go lower, it can do whatever. One moment, please. So that is our landmark. So we can stay in here. This is the retail price from yesterday, the highest volume. So this is like a retail price. This is an outside edge of what's called a distribution of volume. That's the retail price from yesterday, and this is the current retail price. So right now, the fair price for today's auction is here. Now, if we spend more time up here, this can move higher. So, but I want you guys to get the lay of the land. This is what having a trade plan is about. Trade plan doesn't predict anything. It gives us some idea of the potential of the market. So let's look at the first trades. You guys have any questions? By the way, I can't see the chats all the time. I'm on a laptop in Mexico, and they kind of get buried here. Let me try to get them back. Okay, I got them. How we doing in YouTube? Are you guys doing all right? Please give a thumb up. Okay, so RTH open. Let's take a look now. RTH, 8:30 Central Time. First trade's going to be a short. Who knows? Watch. RTH open at 8:30. Let's get there. Now, this is an aggressive trade, and this is a trade I always suggest that traders don't take until they already have other trades vetted, because it's very fast, and you have to have really unconscious competence to be able to trade this. It's just too fast. So you can't be thinking about it. You have to do it. So let's look at this. So RTH open. This is called this is an opening trade. It's based on something called VPOC migration. I kind of came up with this. I'm not saying I'm the first person that thought of it, but I never heard about it. So I started working with this idea many, many years ago, actually, in I think it was in the late 1980s, 1990s. One moment. Okay. So this is where the volume starts. So this yellow line represents high volume. Now, and it starts at 0 at RTH open. So basically we open here. So this is where the volume starts, and we drop down. It drops down because there's more volume, obviously, taking place here than there could be over there. So in a microstructure, and that's what makes this so difficult, because you can get fooled very easily with this. This is the new retail price. More volume is here than there was there. Okay. And I break here. So I see my sellers. This becomes resistance. This is resistance. Again, microstructure, it could very easily just come right across. So this is a very aggressive trade. I always say very aggressive. Now, it's easy to get picked off in this. But for me, my bias is to the downside. So I have not had any longs today, and it's only been shorts. So we'll see why. And it doesn't mean you can't take a long. It has nothing to do with it. This is all time frame oriented. My time frame is a little bit more swing oriented, swing intraday swing. So I go for range. And why would I want to go for range? Well, first of all, if I understand how the market works, I can then kind of isolate and consider the potential that gives me range. The other part of it is, since I'm the same as you, I take stops when I get out of alignment, and I get out of alignment same as everybody else. My stops are less than my gains. Funny concept, but this thing of risk reward, keep your risks small, get larger rewards. You can afford to pay the gamblers or take stops, overhead and cost of production, when over time you have an edge that gives you a yield that pays for the stops and gives you a net. I know it's ironic, but that's how I approach this. It's not about action. For me, it's about patience, being selective, acknowledging that you take stops to protect your account, and go from there. So break low, test. So what this is telling me here is, and we're only in here, 31 seconds right here. So break low, so I have resistance. This moves down. This is saying there's more interaction between buyers and sellers here than there is here or up here. This sets up a short right here, there. And you always have the risk of it coming across the range and taking out the opening swing high. You always have that. No way around it. Now, a lot of what you do with this is optional in the sense of how do you manage your trade. That is something everybody has to get their head wrapped around. Some traders are going to see this, they're going to cover. Other traders are going to see this, they're going to use it to put a short on. What are you going to do? Everybody comes up with their own thing. What I do is I try to aim for the higher time frame targets. I do manage my trades inside of rotations. A little more advanced, and it also, I pay the price for that. At times I get out of position, the market goes up further without me. I have to accept that. Other times I'm going to keep my stops outside and I'm going to use a counter rotation to add, and it gets more advanced doing that. Let's look. Too high. I'm going to label this. Overnight volume. I'm sorry. Boy, I'm a little slow this morning. Variable high volume node. Too high. New retail price. If the price becomes too high, I'm going to leave it. Basically, trading is shopping. So the shoppers are going, no, we're not paying that, and they leave the store. So as the perception of value changes, the market's going to move either towards it or away from it. So if this becomes too high, now this is the new retail price. I got mid and VWAP. What's it going to do here? Well, that's my resistance now. If I break here and go down, maybe it's still too high. This now is support. Breakthrough, it becomes resistance. I'm going to put a little box around it. So this is resistance, VPOC migration, going south. Everything is saying south, right? Going south. This is the target, by the way. Hold on one second. You guys have questions, throw them in the hopper. Do my best. Okay, I'm sorry. So, too high, gonna label it. Now, the volume pointer controls, the yellow line, it's below us at the moment. It's here. This is the fair price. Now, here is resistance. Come across here. You can be out of the trade. You can manage the trade here, or you could be sitting with your stop further away out here. These are distributions. Too high, too low, retail, VHVN. If we leave it, now it starts this. And as it's walking, it's auctioning. And then we break away here. Now this out here is an outside edge called the low volume node. So the market can come out here into this area and then return. That's called mean reversion. So that's one possibility. The other possibility is that could be the end of it, right? So let's look and see what it does. We have our VWAP in mid, and we have liquidity coming in here. So we're pushing outside. So subject to how you manage your trade, when it comes out here, you could be out of it also. So basically you could be out of this short. And then for me, what I do is if it comes outside, I'm going to look at it to put it back on, because my retail price is here. This is the mean. So outside. Now the problem with mean reversion, of course, is where's the outside? So right here, we come up. This would take me out. And right here, you put it right back on again. Right there. You have a sweep. You have the liquidity. There's no way to know it's going to come out past here. This is trading. It's maybe. And the other part of this is we have the VWAP in the mid. So if we come outside, we have a trade in Trader Lab called VWAP to VPOC. And we're still going for value area low as the target. So I would put this trade back on, and there's your entry. So your entry is here. You have this break. You can also enter here, and you're going there. There, and there it is. And then you have a sweep. So this trade right here could be over, or or you're managing the trade and you're waiting, to see what it's going to do from here. And so you're still short. Because don't forget, we have a high probability of taking out either yesterday's high or low, right? So if we're bearish, which I am, at least, based on everything it's doing intraday, all I have is shorts. So I've never had a long, it's just been shorts. Now, so for me, I'm still looking for shorts when it comes across and it comes through. Where's my next location? It's this. This is the retail price in the developing daily time frame. In fact, I posted this in Trader Lab. I think there were some traders thinking they should get long. And by the way, it's not right or wrong. But I know if I come here, and this is the retail price from yesterday, and it's too high, I can sell this. Then my objective, and I mentioned this, was mean reversion, was to get short and come back here. 93, 94 actually was it. Here, let me show it to you. So this sets up the short. So the short's here, and the objective was to come out here. 90 to 93, I think is what I posted. And it got here. There's this liquidity. So the idea of this short was short here, short to there. Then it came back up again, and this is where our sellers were. So you could put this back on again, and you're just working this because you're working a reversion in multiple time frame. You're trying to come out here, just out there. That's the trade, out to here. But notice what's sitting here, liquidity. So all these are shorts. So if you take another short here, you're still trying to come down here. When you get under here, you've got the VWAP and the mid, and you're trying to go here. This is a compound mean reversion. Let me try to give you an idea. The long side, again, I'm not taking longs. I'm only taking shorts. This is an important level, and so is this, okay? So when we come here, and look where the liquidity is sitting. So I already know, because the order flow is helping me, that this is important. That sets the shorts up. Now, this is a mean. This is a reversion back to this VPOC. If this is a short, where's my mean in the developing time frame? It's down here. So this is a short, and then either you're only coming out here to do this, or if you get under here, you're back to here. Now you have yesterday's high or low, and the first hour's high or low. Well, if I can get back here and get below it, then I have the first hour's high or low is still open, and I have a stat that says yesterday low or high. So that's to be determined. So, what was this? Was this a tweet or somebody tripped over a cord somewhere, guys? Trader Lab, was there news or something on this? Oh, POTUS talking about China. Okay. All right. Well, it's only shorts. Now, on something like this, you get thrown under the bus with everybody else, get taken out on a trailing stop. Let's see if there's anything else here. Looks to me like you still got to get short somewhere. This, get blown out, come back here. I'm going to see, is this current? Where am I here? I think I'm getting pretty current. Yeah, this would be tricky. You'd want to get your short back on, and you're looking to take out the first. This is your IB stat. So for me, it's only shorts. Can't imagine getting long, but that's just me. Yeah, just short. It's not updating. Hold on, guys. I'm going to try to fix something. So it's only shorts in my time frame. Other traders are going to take long and short, and I have no judgment on that because that's their plan. Yeah, just short. And if we take this out, then we have the rest of the gap to finish, and we have this as a potential target. Let me come back to this. So we have yesterday's low, remember, high probability, and this is a naked volume point of control from this day. Now, remember, this is the gap. And the thing about this is, let's look at this in a few different ways. First of all, this is the naked volume control, point of control from here. It's too high. Yesterday, we tested this, too high. So we're rejecting the perception of value from this day. That's yesterday. Today, what are we doing? This is the naked volume point of control from the day from yesterday. What did we do there? It's too high, and we've been selling it. And the open, we've been selling it. All we've been doing is selling. We had this as a first target, value area low from yesterday, and then we came up here, found too high, and now we're below this. Statistically, we have a high probability of taking out either yesterday's high or low. Given where we are, subject to, it is always random here. And then what's this? This is the potential target. So we have this high to fill the gap, and then we have this as our retail price. What do you see that's familiar? Retail price too high. Current retail price. So we're doing reversion outside back to here. We're under here. We're under here. We've got nothing. And we clear this. We have this high, the gap, and then we got that. So that's on the hip parade, and who knows. But that's it. So I haven't had any longs. There are times, believe me, where I'm looking at it and I'm going, gee, maybe you should be thinking about a long, but I don't have it. So, and here's the other thing about what I'm not saying I'm the exemplar of what anybody ought to do. I'm much more patient. Maybe that comes from 46 years of trading, but I'm more like I want the broad stroke. I want to pay for my stops. I take them. I don't worry about them. I used to be, when I was more short-term oriented, I did a lot more trades. But what happened is over time, and it took a while, because I went to both extremes. I, at one point, was a high-volume NQ trader, 100 trades a day kind of thing. And then over time, I kind of went, well, that's a little too much, work, too much commission. And sure, you'd have a great, you can make substantial amount of dollars, but you're always paying a big percentage of it to your broker. And then when you had a bad day, which is part of trading, you're still paying to your broker. So it was a lot of work. And because of the volume I was doing, I either had to get a membership to lower my cost or change time frame. So I think I was more interested at the time just being able to do it, demonstrate to myself that I was skilled enough to be able to operate mentally like that. But I changed it, and I found that as the years progressed, I had much less need to play what today is a video game. I was much more interested in less exposure to risk and more profit. Interesting concept. So what I found was, even in a high volume trading process, my risk really didn't get compressed. I could only compress my risk so much and compress the rotations. So my risk could never go down past a certain amount, no matter what I did, but I would lower my targeting. So my R ratio was compressing. Well, at some point when you're taking a lot of trades, you're actually taking more risk, right? So what happens if you take less trades, keep a similar risk, but go for more range? How does that impact you, So over time, that's what I evolved to do. So let's keep an eye on this. This is the IB. Now, there's a couple possibilities here. You can do what's called an IB continuation trade, which would be a short from here, this area out here, and you have to be prepared, of course, to take a stop. So let's look at where our resistance is here. So your resistance is right over here because this is where the sellers took control, you see. So if you're going to go for the IBC, you are shorting it here, and your stop needs to be out here above this volume. Let me draw a little box for you here so you can kind of see it. So this is a short in the Trader Lab structured trade. It's a continuation trade. Let me show you it. Now, everything is pre-planned in the sense of where your trades are. The idea of structured trades is not making it up. What should I do? If you're in Trader Lab, you have a trade plan, and your plan really tells you what to do. The outcome, that's just random. So the volume in here is really right. Try to get this a little better. In here. This is your resistance. It's pretty much right there. But right here, this chop, 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 in this structure, you've got your sellers here, your buyers here, the sellers take control. This volume in here is the shopping experience. And basically what the market participants are saying is this is too high, and maybe now what was support becomes resistance. It's right here. So this volume is mean reversion. When I'm talking about reversion trading, it's happening in all, quote, time frames. And the time doesn't control this. What controls this is the participant behavior. So this is not a clock-based process in the developing time frame. So this is a short in the Trader Lab. And I don't call trades. You don't want to take my stops. I take them, you take them, right? So this is a short. Now, the key to taking a trade like this is, where were my buyers? They were right there. So I have to scale ahead of where the buyers came in, which was there. So I got to have a scale either out here. So I have to get risk neutral. So I take this thing, I got to get my risk off, and then I'm holding for a statistic. And whether it happens or not, I don't know. This. So if I take a short here, I'm going for that. And I don't know, it might go there where they say the winding road, This is called the IB continuation trade. It's in those 60 PDFs that I mentioned. And it's an alignment trade with the direction of the market for continuation. And now remember where the obstacle is. It's right there. I have to scale right ahead of this. Right there. That's my scale. So the trade will go on here. You use a shoehorn to get scaled. The key is to get risk neutral. So the worst that happens is you scratch, and then you sit in your Barca lounger. You deploy your trade management process, which is an individual thing based on how you deal with rotations. For me, I go for the broad stroke. So I'm looking at this statistically, because there's the statistic of taking out the previous higher low is 82%. For this astute group of traders, do you think we're taking out yesterday's high or yesterday's low? That's how statistics can help you. By the way, we don't have to take out yesterday's low either. We can stay inside. So that's not the point. The point is alignment. Are you guys with me? Is this making some sense? How we doing in YouTube? I lost the chats again. I'm going to try to get them back. And Trader Lab. Would I consider IBC valid in this context? Yeah. I guess I answered that already. Sorry. See that? Yeah, this is qualified structured trade. And a lot of what sets this back up is what happened and what didn't happen. This here, this tells you that this is too high. And we had the overnight VPOC. That's why this was a short. Now, for me, getting short here and trying to, hold it all the way down, that's a bit hard for me to swallow. What I tend to do is I take pieces of it. It rotates to another low. I mean, I can stair step it down taking shorts, but I haven't had a long today. Now, if you've been taking longs, and it's not a criticism, you have to be looking at the context, which is the number one driver. And other than being an intentional counter rotation trader, you need to know, if you're taking longs, did you think the context was up, or were you consciously taking longs to trade a counter rotation? There's a big difference. Because if you thought the context was up, it wasn't. You can take longs in any market, but you need to know the context so you can determine whether you're in alignment with the dominant side or whether you're taking a counter trend trade. If you don't know your counter trend, then you have to work on understanding your context. I tend not to take counter trend trades. I use them for trade management unless I'm in a different condition. I trade both sides. It's not the point. What is more important for developing traders, and I always say this, is align with the dominant side. Use the counter trend triggers or trades, if you will, for trade management. Become successful and create an edge when you have the wind at your back. When you're trying to pick outside edges for a counter rotation, you're with the minority, because if the trend is down, what you're basically doing, unless you get lucky and pick the low of the day, which is not it's not going to happen often, because nobody knows the low until hindsight, you're only going up on stop. So in this leg, the reason for the market to go up primarily is buy stops. Isn't there a difference between alignment with the trend and a counter rotation? You see what I mean? You have to know the difference. I see there's a trader posting he missed a lot by one tick. Well, you got to look at that. For example, if you're doing the IBC, this is your trigger. I mean, you could be taking it anywhere after 9:30, long as it breaks the IB, which I guess it broke it. Where did it break it? Didn't break it till here, right, guys? So this is your trigger. There's a sweep. It comes up, and now you get this. You're at value area low. You're outside of value. This is a good short. Now there's the trigger. You see, you have it. You can enter here, or you can put your entry one tick under here. Your stop can be above here, and then on the retracement, that's your short. You see, that's all structured trading. That you can learn this in Trader Lab, but that's where you would enter. So if you're not able to read it, you can be somewhat mechanical. There. And then here, this is resistance also. You could be entering it there. All these are short. These are all short entries here. There, stop. So IBC is, this one is classic. You guys ought to screenshot that. By the way, don't forget there's a contest that you can win 3 months of Global Plus. $600 value. I don't know where that went. And it ends today. All you got to do is hashtag free blue jacket, drop it on Instagram, X, or LinkedIn. Take a screenshot of that, send it in. You might win 3 months of Global Plus and the coveted blue jacket, just so you know. Don't want to miss out on that, do you? Ends today. Here's one you can screenshot. Don't tell them I suggested it. But this is a structured trade. This is what the Trader Lab is about, in case you're visiting in YouTube and you guys aren't familiar. It's helping traders understand how the market works, why it does what it does, how to get in alignment. There's a reason for all this. There's a language involved here. There's no indicators. What there is an understanding of what the market is. The market's a pricing mechanism. It's not your MACD or RSI. That is not the market. This is the market. So if we understand market mechanics and a foreign language, we can then navigate it with trades that we vet. So we wait for the trades. If we understand the condition, and this is a language you need to learn, we understand falling out of value area and having the IB. This is about as nice as it gets for a short. And I say not as, and it's still subject to taking a stop. So let's there's no, we don't have the holy grail here. What we have is business of trading, understanding market mechanics, having trades we vet, and waiting for the trades. That's the business. Now we're trying to go here statistically. Remember, statistics. This is what Edge is about. You guys have questions. This is Trader Lab. You can learn this. And it's going to require you to do something different. Abandoning indicators. Now, I'm not saying you have to. It was hard for me early on, because I grew up with indicators. I started in 1980 and they were new. So, and I'd like to just mention that I shared an office with George Lane. He created stochastics. That was the holy grail. Look at that. The line crossed over and it went up. What else do you need? Sweep into liquidity. Let's watch for a counter rotation here. Now, if you can determine a counter rotation before it happens, you need to know what you're going to do about it. If we get below here, don't forget where our target is. We go here. But what happens if you're sitting in this short and it starts doing this? Are you going to panic? Are you going to go, oh, I got to get out? Or are you going to go, gee, I better get long? What are you going to do? The answer, my friends, is not blowing in the wind. The answer is in your trade plan, because you can't make decisions here. The decisions are made outside of trading hours and they're in your plan. It's almost like a pilot. You know what you're going to do, right? You know how to fly. What are you going to do? You're going to fly. What are you going to do when you see this? Panic? No. It becomes plan-based. All the work is done outside of trading hours. And all you do is show up and do what your plan says. And the reason you have confidence in your plan is because you've worked on it to know that in a random distribution of outcomes, you have an edge. Not the last trade, not the last 10 trades. Over a large distribution of trades, if you follow this plan and you have the discipline, and that's going to be your biggest obstacle. I believe anyone who comes to Trader Lab and does the work and learn how to trade. And when I say doing the work, is step by step, trade by trade, structured trade by structured trade, one at a time. And our nature, we are gripped by FOMO. We're going to do everything that's not in our best interest to create sustainability, because we can't control ourselves. We can't set out a path for ourselves and build a career. You want to be a surgeon, right? You want to skip residency. You want to skip everything. Let me in the operating room. Give me that scalpel. I can do it. Would you let that surgeon operate on you? Well, what makes you think you can be in this business and not put the time in to develop the skills? The unconscious competence, the experience, the experience. Now, you see this? What are you going to do right now? You don't know before this happens. You're going to respond emotionally, because the trading plan is a tangible asset. Emotions are chemically induced, fight and flight, FOMO, fear of loss. Right here. Oh, I'm afraid I'm going to give it back. Well, maybe you are, because you don't have certainty. What I have, and it may never get here, is a statistical probability that suggests that there is an 82% probability I get here. If I have it, and that doesn't mean it will, it's not 100%. Do I hang in here for this, or do I get out right here? Maybe this is the low of the day and we never get here because it's Friday. Maybe the shorts are going to be, well, we better get out. What do I do here? I have a sweep that suggests counter rotation. I have another sweep and I have this liquidity here. I have my buyers here. I have my buyers here. Tom, what are you going to do? The answer is, my friend, is blowing in the plan, not in the wind. I know. By the way, Day of the Dead down here in Mexico, going to be insane, basically. And it's a celebration of life. So that'll be interesting. What is the question, Shurak? Doing is looking for confirmation there is none, increasing risk 8 to 9 ticks on a particular trade, but maybe. What was the question? I'm seeing there's a question about waiting for a microstructure trigger. There is a trigger. This is a trigger. Right here, break, test. I'm getting a question about the IB continuation. Is that the question? Micro trigger on a trigger. Trigger on a trigger? Trigger on a trigger. No, it's the low of it. I think you're referring to this. This is the entry is here. It's the outside edge because the buyers were here. The sellers took control. The question I'm getting is, would the trader wait for this? Is that correct? You're talking about the high volume node? Is that correct? Do I have that right? I'm waiting for the answer. Well, let me just see. Take a look at the stream. We broke the IB here. I believe this is the first time around 11 a.m. before 11 a.m. my time, right here, and we had a sweep. Is this what you're referring to? Is this the IB break that you're referring to right here, where my pointer is in the stream? Just yes or no. Yeah, that's right. Well, that's a trigger. This now qualifies it. Now this is your chop chop. All this is your short. And if you're waiting, this is it. Now it retraces. This is your entry right here, right against where the seller, see the buyers were here. High volume is there. All this is your short. So this is your trigger, and that's your entry there. And your stop needs to go, out here would be a good place for it, but wherever, comes back in here, you could sell it here too on this way out. So you could be selling it there, there, same. Okay. Yeah, this is short. I don't understand the question. This is the short right here. I mean, you could sell it anywhere you want, here or here. It's all the same. So I think I answered the question. Louis, I'm not in the Barca Lounger at the moment. So now we're talking about trade management. What do you do now? Because we know the buyers are here and the buyers are here and we have our sweep. The answer has to be in your trade plan. Now, I can tell you for me, and this is not a recommendation, I'm only talking about me, not saying it's a good plan, just a plan. I don't have a long in my on the menu for today. If it comes back inside, it can come back here. And that would be reversion. But I don't take the longs today. I just take the shorts. Me. Not you, me. So where's my stops? My stops are going to be out here. I have a low volume node here. So this is an outside edge. And I have buy stops over here. If I come out here and I see exhaustion, and I don't want to make a recommendation, I would consider continuation short because of my statistic. And it may never get there. Remember, it's Friday. We might get short covering. I don't know what it's going to do. So since I know I don't know, I'm not into the what is it going to do. I know I don't know. So the trade plan, either when I have this, I am covering, or my stop is way out here someplace and the trade totally has to fail. And then I accept that I'm going to give it back, my open trade equity. Does that make sense? The plan solves it. Anyway, Chirac, I hope I answered your question. I thought I did. I think I did. Gee, I don't know what I'm not answering then. Then I don't understand the question. We didn't break it before this, so this is the IB. Now you can, this is a short. So what part of it, why would I be waiting for anything? This is, you could enter right here. This is a test of the high volume. You could enter there, you can enter there, and subject to how you read it, you could be entering here, but let's assume you don't. So what else is there to wait for? I don't know what else there is to wait for. So Rich has asked me why I switched along yesterday, because we went down first, which was the shorts, and then yesterday it was longs up to the previous day's value area low, which was the primary target. Now, yesterday was we went down first, then we came up and the target was there. We got there and then we rotated. So as long as we were sitting up here and we were already back inside this, then the idea for me was to come out the top and then come back down. So all I was looking for, and we had long reversion trades going. So as long as the long reversion trades yesterday, which were outside in, were working, I was looking for the shorts to get squeezed. That's all it was. And then I was looking for the IBF, which is what we don't have today yet, which would have been pop the top, get the shorts out, and then come back. So that was my plan yesterday. So the reason, the longs were actually quite good once the short side failed early in the morning. So they were very nice trades. And then the long reversion trades were all profitable trades in the sense, except they didn't break out the top. So they were scratches at worst or small winners. There weren't any losers on that. And then when its structure started to break down, and that's a micro VPOC shift, I covered it in the stream yesterday, then it was got very iffy for the continuation. The volume was building below the developing volume point of control. I really can't spend time on it, but that kind of said there was trouble. And then we took out the low and made a lower low. So, and the shorts were okay there too. There were shorts there, just not from the top. Today, there hasn't been any longs for me. So that was it. Now we're coming back to the IB, I see. So now we got to watch the behavior. Let's look at the behavior. Anyway, Sharak, I hope I answered your question. I think I've exhausted it. Now, where are the stops? Up here. So now we're going to watch this outside edge. There's a low volume node here. Stops are going to be here. This is an important area to observe. Let's see what we do. For more microstructure, present is better or worse? Well, I don't understand the better or worse because in trading, its hindsight is better. When you're trading structure, like this is where your outside edges. This right here is an important location. We also know there's stops above these swings. So if we come up in here, we really want to see the behavior right up in here. And here's the other part of this. We can come here. Because we have two trades here. We have the IB, and then so we can either come here and come back down, or we can come here. This would be the IBF. Now, I'm just telling you, and it's not a recommendation, I don't take that trade. It's a trade to go there. I look more for the continuation, and the reason is that I have a statistic that I suspect favors this. So I just don't take this side of the trade. So there's two sides of the trade here. There's this to this, which is a reversion trade, and then there's this, if we don't get there, back down here. But look what's sitting here. You see this? So we want to watch this. So we had our buyers there, we had our buyers here. And now we're coming across this rotation. So we have to see what happens up here. Truck, if you have a location for a trade and you're waiting for the second touch, why would the market give you a second touch? It might not. The idea, there's no certainty. So this is where the trade would go on. Stop goes up here, and you take your stop or whatever. Now, here's where the volume was. That was too high. And again, there's stops here. So when I come up to this location, there's my liquidity. This could be another area for a short, or we're just going to blow through. It's already on the chart. There's my liquidity. Let's see what it does. These are not trade recommendations. So let's see what we have. We have absorption here. We have that sitting in the book. We're at our outside edge. We're over here at our value area. This is your area. And if I push through, which I can, I may only squeeze. Notice what's over here. See the liquidity? See the liquidity? It might be the same guy. We don't know that. So, and all I've done so far is pick. So this is important. Now, if I take a short here, I gladly take a stop. In other words, I won't throw a party and you'll all get invited, but it's the cost of production for me. So if I'm in this trade, I either manage it or I just ride it out. It's almost like riding out Katrina, the storm. Or I put another trade on here. Why? Location, structure. Why did the market come up? Always a good question. What's in this leg? Buy stops. Those are the buyers. Now, either I get more buyers and I revert here, or I just take another short up here, or I add, or I do nothing. You see, that's the trade plan. And the outcome is random. And Chirac, I don't know if I answered your question, but this first touch, second touch, what are we avoiding? Are we getting less risk on a second touch? I'm asking you because I don't know the difference. I don't know if I can't give you an answer other than either or neither. So do I have less risk on a second touch? Is that what you're saying? More confirmation? Well, I know if I get short here, I'd be risk neutral. I know this is the entry if I'm trading a structured trade. I'm not this, no idea. I know if I get above here, because this is reversion coming back here. This is what this is a reversion to go there. Coming back here is a reversion right back there. If I clear this, then I'm going to squeeze this out. And even if that happens, I'm still going to look for the short because I'm at an outside edge. Kind of funky, but that's that's the structure. So what I do when I have this kind of stuff is I already know where the locations are. Then I'm really going to drill in with the order flow, try to read the nuance. So this is my nuance. So I have my sellers are here. I have a sweep here. So I have buyers absorbing here, and I need to get below this to go south. If it squeezes up, I take a stop, go on to the next trade. So this is still a short for me. It's not a trade recommendation. What I know is, what do I know? Value area low, outside edge here, IB. So this is another potential IB continuation trade. The same trade. And again, I don't know what's going to happen. You guys who follow, go out on YouTube world and all these Instagrammers and everything, there's no prediction in this business, guys. What there is maybe. Best you have is maybe. Maybe we'll get these sellers, we'll come back in. Maybe the stops over here will get taken out. Maybe I can short this and my stop goes here and I need to get risk neutral. And then maybe I can come back to where the buyers took control here or here. Here. Sellers were here. Buyers came in here, high volume, and here. So I can be short and then it's trade management. It might only come out here or nowhere. I have to get risk neutral. That's what I always say. The business is location, risk management, which means risk neutral first, and then you put your helmet on, and it's like, oh, what's it going to do? I don't know. I always get asked, well, what's it going to do? I don't know. And a lot of traders, or at least developing traders, while we're still learning to trade, want certainty. It's a psychological need. Well, Tom, you've been doing this 46 years. You should know what it's going to do. No, I'm going to tell you, I know what it might do, and I know where it might do it. I don't know what the participants are going to do. You don't know it. I don't know it. So the quote truth of the market is the best you have is maybe. Maybe they're going to take this out and the stops get squeezed. The shorts get squeezed. Maybe the sellers who sold up here before go, oh, really? Have some more. And we get this. Then either the buyers in here and in the previous leg down get squeezed, or maybe the longs in here are weak longs and the sellers overpower them. It's one or the other, but the answer is not in what I think might happen. The thing that the profile offers us is understanding where the important levels are, which is this, and where we might get a reaction. Then we use structure, and where's this structure coming from? It's coming from here. So I already know it's here. That's why I can look at this and say, this is a short, maybe, right? And where's my indicator? Oh, I don't have any. What do I have? I'm getting as close as I can to the real-time market. No lagging indicators. What I'm doing is I'm using order flow and structure that's created by the volume profile. You see, I'm combining the most real-time interaction of participants and understanding market mechanics. You can learn this. It's a language. It's not an indicator. And then whatever happens, happens. See, here's the thing. With your indicators and the way I do this, I'm getting in here or here. With your indicator, I don't know where you might get in. I want to be in as close as I can with the structure so I can manage and have the smallest amount of risk. But if I understand market mechanics, does this work for you? I'm not saying you'll ever be a profitable trader, but if you, in spite of the random winning trades, everybody gets, by the way, and you're going to work hard and try to make it better. If you don't have a statistical edge, you're going to leak equity. Doesn't matter. And I know myself, I'd have all these winning trades, and I think, well, how do I get more winning trades? Well, let me keep doing what I'm doing. Let me do it better. Right? Very logical. But the market, gamblers have winning hands. Well, that's not how this works. This is how it works. And again, you don't have to accept what I say about it, but sustainability is kind of important in this business, not the random outcome of any one trade, you see? So that's kind of where I come from. I come from the places I've walked in your shoes. And by the way, everybody in Trader Lab's done the same thing. The only reason you get the Trader Lab is because you've already done what everybody else does. And you start realizing that if you don't do something different, you can't expect a different outcome than most retail traders who are doing what you do. And most retail traders, as you know, the failure rate's over 90%. And I know for myself, and part of it had to do because when I started trading, technical indicators were new. I actually learned classical bar charting. We didn't have candles. We didn't have any of that. Didn't have PCs, didn't have an internet. You should start trading then. What you had was a ruler and a pencil. Think of it. Oh, let me move that trend line. Now it fits real good. Have you ever done that? It's all the same. So whether you're using some kind of backwards-looking price-based derivative indicator, it's all the same. When you're tuning or tweaking a 9 EMA or make an SMA, or you're using a Keltner channel, pick one, doesn't matter, Fibonacci, it's all the same. They all work randomly. Look at your software toolbox. There's 200 indicators in there. They all work randomly. Here's a question for you. Why are there 200 in there? Because they all work randomly. And then you go on the quest, the right mix. I did that. And I built trading systems to try to do it better. So when PCs became available, my first PC was an Apple IIe. I started doing technical analysis on the Apple IIe. That was fun. So I've been working at this a while. And I will tell you that over the years, I'd have winning streaks, I'd have all this stuff. But what I didn't understand is I was in the gaming business. I thought I was in the squeeze the risk out confirmation business. They're not the same thing, right? So when you're mentally going through this process, how do I avoid risk? Where's my confirmation? How about there is no confirmation? There's only maybe. Maybe it'll do this. Maybe it'll do that. Maybe it'll get here because I have a high probability, 82%. Maybe it'll never get there. Maybe it'll stay in yesterday's range and squeeze me out. Maybe it'll go up before it goes down. Maybe if I'm short, I'll get squeezed out. How about this? I get squeezed out here because let's just say my trade management says if it comes above here, and I see this, I'm out. I put the trade back on again. I'm trading inside a higher time frame. Think of time frames a little differently. Think of them as Matryoshka dolls. Those Russian dolls that are inside each other. When I'm mentioning to you the short that was off of the naked this thing, it's the same behavior to sell this as it is. Now this will get you to sell this. How can they be the same, Tom? Because what is this? An auction. In this fractal, remember, vertical integration of time frames, Russian dolls, it's a vertical integration. This is my retail price, my volume point of control in here. This is a store. Let's remember, what is the naked volume point of control that was near the high of the day? That's the retail price in your supermarket, okay? I come down to the little mini mart. I have the same process in a short, quote, time frame. No time here, but let's call it a time frame. That's my retail price. I'm not paying that. Oh, but Tom, it's on sale. Buyers. Sweep, buyers. Sellers, buyers. Break low. What does it say? Too high. I come back and check it. Are you sure? Bertha, I'm not paying that. Let's get in the car. We leave. Now, Bertha likes to shop up here. What is this? Mean reversion. What is that? Mean reversion. What do we do with mean reversion? I'm trading the mean inside of the mean. What is this naked volume point of control on top? Mean reversion. So in a higher time frame, I'm coming back there. If it's too high, I'm going south. In a micro time frame, if I come back to the retail price, it's too expensive, I'm going south, maybe. Does that make sense, guys? I know, confusing, but not really. It's only confusing if you've been reliant on your Google Translate or indicators to tell you what's going on. What does your indicator tell you? Does it tell you to get long? Does it tell you here to get long? Did it tell you to get short here or to get short there? I don't have an indicator. What do I have? Buyers and sellers. Who makes the indicators give you information in hindsight and not in alignment with the condition of the market also? It's the output of the behavior of price. I'm using the output of the participants, not a backwards looking measurement of price. Does that make sense? It's another way to slice and dice the market. I'm not saying it's any better than your indicators. I think it is, but I'm not going to say that to you, because if you believe the answers in your indicators, then that's your truth. For me, I couldn't bend the process to fit what I believed it was. I had to throw away my beliefs because they were erroneous for the business. And this is kind of almost a philosophical question. Think about why you make choices. We choose to avoid risk because we're wired to avoid risk. When I'm sitting here looking at this, what is going on? Suppose I have to make a decision right here. Am I going to wait to be sure? This looks like a microstructure short right here. It's not a short, but I'm saying is I'm reading this right here. I just, boom, oh, there it is. What does it say? Let's look at the language. I'm not paying that. Micro, outside edge, retail, high volume node. And if this is too high and that's too high, then I can continue lower towards the target. If I find buyers and this is too low, I can squeeze up here. I know that. This is the auction. I'm not paying that. Sellers down here. Oh, it's on sale. You see? Retail. It's here. So if I come out here, maybe this is too low. Out there, we found too high. Too high? Maybe too low. What is the answer? I don't know. You? So I know the last place. So this is too high. This is too high. Oh, I'm not paying that. Yeah, but it's on sale. I'm not paying that. Yeah, but it's on sale. Retail, fractals, multiple integration of time frames, Matryoshka dolls. I'm not paying that. I'm really not paying that. Well, what about here? Outside edge, sellers to control here. We're out of here. Low volume area. I'm not paying that. We're gone. Let's check it. Retail. Get below here. Can't get back above it. And now we're doing this. This is rotational. If this was a wider range that fit my plan, I could short that. And if I get below here, onward. See? And south. Not a recommendation. What I'm trying to share with you here in this stream is market mechanics. How does the market work? Then, if you understand how the market works, take specific trades that I've shared in those 60 PDFs. And by the way, not plug and play. Don't even think about it. And that's about as strong as I can get to say, don't do that. It doesn't work. This is a structured trade. If you go down in microstructure, this is a short, but it has to qualify per your plan. If you get finesse, and this is not to say FOMO, you can navigate and understand the behavior. You would understand why if this qualified for you, this is a short or a trade management process, out here. So you could be hanging out, teeth chattering on the counter rotations like we all do, emotional response, and not be doing anything other than going for what? That 82% probability to get under here and maybe come here. Is everybody tracking? This is a Trader Lab. This is not rocket science. It really isn't. But we make it complicated because we think the answer is in the complexity. The answer, my friends, is blowing in the wind. The answer's in the simplicity, but the randomness is what drives us crazy because psychologically we are wired for certainty FOMO, don't let it get away. Oh, I'm going to miss it. The emotional things are primal wiring. Just remember how your dog responds if it sees a squirrel. It's triggered to behave. And your dog has FOMO. Could be a pigeon if you're in New York City. I can't tell you what we used to call pigeons. But I'll just say, I'm going to say something or other with a oil slick around its neck. That's a visual for you. Let me get these chats back. Guys, do you have questions? How we doing? If I was starting over, I'm getting a question in Trader Lab. If I was starting over, where would I begin? Well, I'd come to Trader Lab and I'd start talking to other traders about their experiences. And I would read the literature. Now there's tons of literature out in the internet world on the market profile and the volume profile and what this is. It's not hard to get information. What is difficult with any process is it's not dogmatic or an institutionalized approach. What I've done with it, and I learned it from the guy who created it, I learned market profile in the mid 1980s. I think it was 86, maybe 85. And I couldn't trade with it because initially it was a mechanical thing. It's going to do that. Well, the market isn't going to do anything, and I really didn't understand it. I understood it from a book, point of view, like here in a book, but it doesn't work. Nothing works that way in trading because the market's random. So, but you can get an idea. This is not hard. If you know how to shop, go to the store. That's what the market is. It's shopping. And when I talk about a mini mart, all this is shopping right here. This is the buyers and the sellers interacting. And if we find a price that's not fair, we're going to leave it. And now we're trying to find a price that's too low. What the market does is it's a pricing mechanism. So first we have to understand how the market works. Then the 60 PDFs I've shared, those are good examples of putting this process together, but it's not mechanical. I always suggest in Trader Lab, there's one trade that traders should, in my opinion, it's just an opinion, learn and master. It's called mean reversion. This is reversion. Back to there. That's the mean. This, outside in, is reversion. Back to there. This is the reversion. In all time frames or fractals, or whatever you want to call them, rotations, there's a mean, a fair price in here, high volume, and then if it's too high, the market can leave it. No, that's too high. So the market's always checking. So the primary trade is a reversion trade. And then it's statistics. You only need one trade to master to become, in my opinion, a profitable trader. That trade is called mean reversion. The market's always reverting to a mean in all time frames. So whether I'm doing the same trade, the trade from here to wherever, maybe here statistically, is the same trade off near the high of the day. They're all the same. They're inside each other. So where would a trader start? You'd start with mean reversion. And you do it on sim to extract metrics. So you understand what is the probability of getting risk neutral. It requires a minimum 2-lot configuration. So because the idea of getting risk neutral is to buy the stop on your runner. And then you develop trade management. And I always say a good way to do this is come to Trader Lab because you'll get a lot of support. Trader Lab's a group of traders. We've all done the same thing. We've all walked in your shoes. There's no secret sauce, no magic. And the nonsense that says you only need one thing and now you're going to be a trader. You see it all the time. You've been in all these chat rooms. And at some point, you just got to say, I've had enough of that. And you got to say, well, everybody has winning trades. That's not the problem. Every gambler has winning hands. If you want to be in this business, you have to know that you have an edge and you sit and wait for that trade. If it never shows up, you sit back in your Barca lounger and you work on your crochet. But if you understand how the market works, as you see me do here every day in the stream, and take stops, it's just part of it, cost of production overhead. I know where the trades might show up. And that's what this is. Waiting, anticipating. You're not fumbling here and going, what should I do here? Should I buy this? Oh, it's going to go up. There's a green bubble. No, it's going, well, where's my next trade? It's over here. What's going to happen? I don't know. But what I know is market mechanics and where it might happen. Then I don't know anything. You know, I'm like everybody else. I always say I'm clueless, but I'm not ignorant. The term clueless means this is random. You know, so I don't know what's going to happen. I see this. What am I supposed to do here? What are they doing? They're front running yesterday's low. You can also, if you want, you can just say, I'm out of here. Doesn't matter. Or now I'm assuming 2 lots. For the stream, I only talk about 2. If you're running a 2-lot from this location, let me ask you, how many of these do you need? This is a 20-point trade plus a scale. Now, do we need to be doing what? Buying this, selling this, buying this, selling this? How do you build a business like that? I don't know. Me? Never worked for me. So my objective is to take out yesterday's low. Why? 82% probability. See the front running? So these are buyers. Okay? Limit orders. They're in the book. And now you get the micrometer out and you start managing this trade, if that's your plan. Anyway, I hope you guys are getting something out of this. And I hope you find this useful. If you're visiting in YouTube, please give a like. If you're interested in Trader Lab, there's a link down there. There's no cost for Trader Lab. You won't be solicited or otherwise abused. There's a library of webinars, some of them up to 4.5 hours long of real-time narration that I've shared in a document section. And I have to tell you, the most important part of Trader Lab, it's a community of like-minded traders who come together to leverage their collective experience. There's not one way to do this, but there's more ways that don't work than ways that do. And I'm not saying this will work for you, because if you're not willing to do the work and cast aside what you believe the business is and retool your thinking, you can't expect to get a different outcome. Hope you got something out of this. Please leave a like. Forward this link in YouTube to your trading buddies if you think they might get something out of this. This is the Trader Lab. This is about the process of trading, understanding how the market works, why it does what it does, and how you might get in alignment with it with a vetted, structured trade plan. This is about the business of trading, creating sustainability. And the only way you can do that is trading with a statistical edge and accepting the random outcome of any individual iteration. Thanks for visiting Trader Lab, guys. Don't forget to like, support the stream, subscribe to the channel, review this stream over the weekend if you got something out of it. And there's a lot of past streams that you can review, so you see how it builds one day on top of the other. This is a story, and when you can read and narrate the story, you might have a better opportunity of alignment and, over time, sustainability in developing a career. Thanks again. Look forward to seeing you on Monday, and don't forget the like.